Hello everyone, good morning, good afternoon, good evening, wherever you are. This is Mo, providing some training on technical analysis, on using the tools that will make you trade better, I believe. Before we go into this training session, I would like to remind everyone that anything that I'm saying or telling during this session is not a financial advice, and everything that I show is could be a help, and at the same time it could not work as the market is changing, as there is other variables in trading, not only technical, that would help you grow in this market. It's trading successfully is not only entry setup or only bias that you take or a school of trading, or it's only psychology or only trade management. It's all together. It is a system. It's a lifestyle in trading, if I can put it this way. So you could be right in something and wrong in other things. So the system has to work together, not one by one. You cannot leave something and do something well and leave something at all. You have to manage and work with all aspects of trading. And this one is just one part of trading that might help you grow and improve. Even you can do it better than I do. And I believe a lot of you will do it better than I do. So please don't take it as signal service or financial advice by any means. Any past future will never guarantee the future performance. So you can have an entry setup that has worked 3 months beautifully, and the next 3 months they're just horrible. So manage your trade well, regardless of it is right or wrong. And again, you can be right buying and selling at the same time. With two people, they can buy and sell at the same price. Both of them, they can make money, and also both of them can lose money as well. So in this video, I will talk about entry setups, because that was the missing part that I haven't talked about it in the previous 4 videos. There's 4 videos before this one. It's very important to go and watch them. The day type, if you want to ask about the how to set up the indicators, how to define day types, how can I know who has control, buyers or sellers. You can see the price action cycle. All of this are very fundamental basics of these entry setup. These entry setup are only the last conditions and rules to enter into a trade. These entry setup could work in one day type and should not work in other day types. That's possible. So you should not, just because it is an entry setup, you go and enter the trade because you see the entry setup. It has to be connected to the market behavior at that day. It has to be connected to the context of the movement of the market. And while I'm explaining this, maybe you'll understand. So before we go move on, I advise you to go and watch the previous 4 videos in the same playlist in English, so the picture will be much more clear. So in this one, we'll talk about 2 types of entry setups. I will not cover all of them in one video. It's too long. It has to take maybe 3 hours at least to finish all of them. But I divide it into with trend entry setups and counter trend entry setups. We will talk about only the first one here, and moving forward, maybe we can add a new entry setup as we go forward. So and because regarding this sheet, I know a lot of you will ask about this sheet. It is already shared below the description of this video. You will find the link of this page, which has the trading plan, which has the day types that I have with examples, and this is also the entry setup. So let's start with trend entry setup. By its name, it is with trend entry setup. That means You need to have a day uptrend or a downtrend day, or maybe multi-trending day. You should not use these entry setups in a range day. It's very tough to see them works, let's say with a higher percentage of success. The win ratio will not be as great if you are using this type of entry setup. I call it attempts and failure attempts. Attempts, who are attempting? The buyers trying, the sellers are trying. It's all the time. Buyers are trying to achieve something, sellers are trying to achieve something. So whenever you spot that try starts, you join that move. Or whenever you see a failure of the weak hand of the market appears, you join the opposite side, so you take their stops. So this called attempts of buyers and sellers. So it is with trend. I use them only in trending day, either up or down. Okay, the another type that we can talk about, because it is almost similar to it but with special characteristics, is the 2021 attempts. 2021 attempts, which means we will use all the three indicators to make sure that the attempts is so strong. So this is a stronger attempt actually. Call this a very stronger attempts. Usually it requires bigger stop loss, and we'll talk about them later. So let's start with the normal attempts and failure. Then we will talk about the 2021 attempts. There is other string setup, momentum trades, and also breakout setups. We'll talk about the limit setup. These all are with trend entry setups. The counter trend entry setups we will talk about later. So in this video we'll talk about two entry setups, the attempts and 2021 attempts, and then next video we'll talk about the strength setups, and then we'll talk about another video, breakout setup. So that's 1, 2, 3 videos, and the limit setup also. Those are 4 videos to cover the with trend setup. And in the counter trend setup we need intersection setup, counter trend. So this is the 5th video, and then the trap setup also, it is a counter trend. So 6. So failed 2021, so that will make it about 7 videos that we need to talk about. So this is 8 entry setups, 8, 5 with trend, 3 counter trend of the move. Every entry setup will talk which type of day is better to use it in there. So first of all is the entry setup. We are saying this is an entry setup that I'm using, and again, this is what I do. Maybe you don't like it, maybe you want to fade it, maybe you want, you know what, I will do the opposite. Maybe you will say no, my style, I will use the stop of this entry setup to be my entry. It's you do it as you see fit. You do your back testing. Maybe it's different from market to market. Maybe it worked in micro, doesn't work in the mini. So you need to do your homework. After seeing this, you don't just jump and apply. Don't ever do that. Don't trust me. Don't trust anyone. Don't trust yourself actually in this kind of setup, because these are techniques to trade the market. There is no guarantee it will work every time. Maybe it is 90% working and 10% not working. You guess what? Maybe your next trade will be part of that 10%. So don't be sure, 100% sure that this trade has to work. It worked with me for a long period of time. I trust it, but I am very flexible to change. I'm very flexible to adjust whenever there is a market change. For example, these days we are dealing with high volatility market. The ATR is much more bigger than usual that we used to have. So of course you need to do some adjustment. You need to size down. You need to maybe change the product that you're trading. So now the attempts and failure trend. So this is a setup that I use in a trending day. And as you can see, this example is for a buying setup. So I assume this one is an update. The market made a high. It comes back. The condition is to touch the 20 EMA, 21, sorry, the 21 EMA. Only the middle one. Don't care about the higher or the lower. Only the middle one. And then the buyers should try somewhere. In this example, the first try happened in this candle. Why this candle? Just pay attention here. This I call it first try. I don't take first try. Usually I wait for the second try. But let's understand, what does try mean? What does try mean? So market is going lower. If you can see, no candle, and I'm using 1000 tick chart. Sometime I use 2000 tick chart based on, you know, the volume traded in that day. If the movement is so fast, a lot of candles, I advise to go to 2000 tick chart. Okay, but usually I'm familiar with 1000 tick chart. Okay, so the market is going down. Look at every candle. No candle of these has gone higher than the previous one. You can see this one goes down, didn't break the higher one. This one goes down, didn't break the higher one. Everyone is always lower, lower, lower. And this is the first time that the buyers go higher than the previous one in this candle. So this is the signal candle, and this is the trigger candle. So you don't know which one will go higher until it happens. So we know the market started to go higher, which means moving higher than the previous candle in this candle, signal candle. So that will make this one is the trigger of this try. I'm not saying we enter here. I'm saying this is the first try of the buyers after this drop. That was the first try. Okay, I see you buyers. I see you. I see you. But I cannot trust you because this is only your first try. Let me see the sellers come. So the sellers came here now. They came. After the market goes higher, after they make a low, now the sellers came, they made a high. So as you can see, this is a low, and now this becomes a high. So now the seller came. They were already there. And pay attention, look, they are not having control. Go back to the control. Who has control in the market? Sellers, although they have the strong move down, but they are not having control. I know that. They don't. They have the current control. They are moving the price down, but still, the market is dominated by buyers already. So maybe this is profit taking. Yeah, why not? So let me see the buyers. Are the buyers strong? I call it wooden buyer, not strong, wooden buyer, mud buyer, crab buyer, are the weak buyer, or they are strong? So doing that, okay, they are not so weak, but still they are not so strong because they are still below the moving average. And now the sellers came again, one more time. Strong, as you can be this candle, but yet they haven't taken the control. The moving average is still, you know, the smoothing line still outside the moving averages, still outside. So that means buyers still in the room. And then the second try started by the buyers. That was the first try. I don't take the first try. This is one reason. The other reason, even this try, you can see the signal candle closed below the moving average. So there's condition for the try to take as an entry setup. The first condition, it has to close above the moving average. So this one is not. This one is yes. It closed above the moving average. Number one. Number two, it has to be strong green candle. This is strong green candle. I cannot accept like this one, for example, if this candle shaped here, even if it closed above, I will not take this because it has a long wick. I don't want to see an opposite wick to my direction. And I can say that the strong candle, for example, let me put it here. We have this candle with small wick up, small wick down, or long wick down, and we have this candle with small body and maybe small wick down. All of them are green. Okay, maybe we have this candle. All of them are green. And maybe we have also, let's say, this candle. Put it, so I have different examples in here. Okay, maybe we have this candle. Okay, so which of these are strong? Which of these are not strong? This one, strong. This one is not. This one is not. This one is strong. This one is not. Why? Always look at two things: the body and the opposite wick. This one, because this one is the selling part of the candle. So if it is small compared to the body, so that makes it strong buyer candle. This one, oh, you can see how strong sellers in this candle were. So this is not strong green candle. This one, let's see, that is the selling and this is the body, because the body represent the buying pressure in the candle. They are equal. So no, I'm not taking this as strong. Yeah, it could mean nothing. It could mean you have to wait for the next candle. Yeah, I know the buyers are here, but also the sellers are here. This one is strong. You can see the wick, although it's too long. I mean, not too long. I mean, it's not small, but look at the body of the candle. This one, it's almost similar to this one, but I don't know why I draw it this way. But let's say it has a strong wick down. It doesn't make it better. This one doesn't make it better. This is a doji. You have higher wick, lower wick are the same. So no decision here in this candle. So I need my first condition. It has to touch the moving average. I cannot do it here. The move should touch the moving average. Number one, touch the moving average. Number two, it has to close above the moving average. It has to be the first candle, by the way. This is the second candle. No, I'm not taking the second candle. I'm too late to the party. I'm too late to enter. You can. I mean, I do it sometime. For example, if this is the second try, let's say there is a try here before, and this is second try. They try, but the close, I'm not taking this, but the next one, they closed above. It has, for me, if it is strong, it's not. You can see this, the wick here. It's not so small. It is almost similar to the body. And even if it is not, I mean, it has to be a very strong candle to take the second candle. Not a second try. This is the whole. We assume it is second try. But in this one, it is the first try, so I ignore it. Whatever. Even if it is closed the first one higher, usually I ignore it. I wait for the second one. You can see the second one. Already we are touching the moving average, so you don't need to touch it one more time. It's already touching it. Then the close is above the moving average. So touch, close above, and then strong green candle. Sorry, my phone was ringing. So this is 3 important condition. Now we have the trade management condition. A trade management. So 3 conditions for the shape of the entry setup. Touching the moving average, closing above, and it has to be strong candle. Okay? Then we have trade management, which basically means the entry should be 1 tick above the high of that strong green candle. Because this is, remember, the signal candle. We will enter in the next one. We will not enter here because we have to wait until this candle close, and then we will enter 1 tick above the high. 1 tick above the high, because I need to see the buyers in this candle are able to go higher than the high of this candle. Okay, so if they started, so this is the move. It's like a trigger of, start, go now. That means go now. Because sometimes candle close strong and the next candle goes down immediately. They are not able to even go higher than the previous candle. So there is no trigger for you. That means the buyer, they didn't start trying. They didn't start trying. Yes, they start, if you compare this to this one, but for my entry, I want them to see them going even higher than the previous one with 1 tick only. So that will be make it the entry. The stop will be just below that candle. So that will give you your risk in the trade. So now we are coming to the risk management condition or the rule. So we know the 3 rules: touch, close above the moving average for the buy, and close strong for the buy. Even for the sell, it has to touch and close below the moving average and strong bearish candle. So this is the shape of the entry setup. Now the first trade management, this stop, you have to make sure it's not too big compared to the ATR. Because you have the ATR for the day, let's say it is 10 points, the ATR. This stop should not be higher than 1.5 ATR. Because you don't want to go into a candle that's too big, would make it already the buyers in this candle achieve their target during that candle. So you want the buyers try in a candle that's strong, not stronger than the 1.5 ATR of the move. Maybe it is 2 ATR. I mean, you get my point. My point is it should not be too big compared to the ATR, compared to the previous candles. For example, if you see the market is, sorry. Okay, where is it? Okay, let me do this and this. Okay, so if you see the market is going down like this, down, so it is red, going down like this, similar candles, and they, let's say, touch the moving average, and then they have the first try, okay, and then the sellers came back again. Maybe they touch this low, maybe don't, but I prefer if they touch the low, and then all of a sudden you see this candle. You see this candle. Of course, I don't need to look at the ATR. Actually, you can see this candle already way bigger than the previous candles. So don't be the first one buying here. Maybe it will continue. I don't know. Maybe this is a news candle. Maybe not. Maybe it could not be this dramatic. Maybe it could be, just normal. Maybe it could not be, let's say, this big. Maybe this big. Maybe this big. This will give you, wait a minute. This is compared to the previous one. This is too big. I will wait. Maybe you don't buy it here. Maybe you limit down. You buy it a little bit lower, so your stop will be reasonable, will be acceptable for your risk. Okay? So, Yeah, so make sure that let me repeat the condition. It has to touch the moving average. It has to close above the moving average for the buy, below the moving average for the low, for the sell, and it has to be strong candle. Then trade management, stop loss, which is calculated from the trigger of the candle, the strong candle, and the low of this candle. This is your risk. This risk has to be less than 1.5 ATR, 2.5. That means this candle should not be big. So you should be able to accept that risk. This is your risk. This is your maximum loss in this trade. Don't think about, oh, maybe the market will take me out and go. That is another scenario. We'll deal with it later. There is solution for this. Not solution, but there is another entry setup called a trap. If you see a trap, so you enter within that trap. If that is a trap, you enter again in the same trade. But whenever you enter this trade, this is your maximum stop loss. If the market would like to go and take you down and come back, fine. Okay? Then, so the trade management condition, stop loss has to be acceptable for your risk. The second one, the target should have a room before the buyers achieve their goal. Because we said you have control, buyers having control of the market, which means they have an objective, they have a goal to achieve. If I have a control, I will try to do something in order to achieve something. So the buyers trying here, they want to achieve their goal, which is the high here. If you go to the price action cycle, this is why I said you have to watch the previous videos. Price action cycle is channel, break, leg 1, leg 2, trading range, reversal. So where you are in that cycle, so you understand what is the goal of the buyers or the sellers. So in here, the buyers, they first try here to achieve that goal. Okay, they didn't do it here. They are trying again. So this is the second try. When I want to take this trade, the first condition is to make sure the stop is acceptable for you, for your trade. So you take how many contracts in that one? 1 trade, 2 trade, 2 contract, 3 contract, 1 contract, 1 mini, 10 minis, 10 micros. So you decide this. And by the way, this is the reason that people fail in trading, because they cannot adjust or they cannot decide their contract size, the size of the position. They go oversizing or so. In here, the condition is the stop has to be acceptable. The second one, the target, which is at least 1 to 1. At least. I used to have it 1 to 125. 1 to 125. Let me write it here. So 1 risk for 125 reward. Okay, maybe 1.5 sometime if the trend is so strong. At least you exit with half of your position here. And after this happen, market comes there, you take half of your position, maybe 2/3 of your position, your stop goes to your entry. Now nobody can take that profit that you took already from you. So you secured half of the target, you secured 2/3 of the target. I prefer 2/3. Okay? If you have only 1 contract, just exit with 1 contract at 125, 150. Never, for me, I never put my stop to the entry if I haven't taken any profit. For example, if you are entering this one with only 1 contract, if the market comes to the 1 to 1 or 121 to 125, okay, and I have only 1 contract, I immediately exit here and I don't trail my stop to point of entry. I don't, because if you do that, the market could go back and take you out, and that means this whole trade has nothing to do with any, I mean, you just took a risk without any reward. So that makes that you are keep taking risk without any reward. So I don't do it. I don't move my entry to point of, even if I want to do that, if I'm one contract, I want to trail. What I do, I wait for the market to go to 2 to 1, and then I trail to 1 to 1. I only trail at 1 to 1 if it is only one contract. And this is a trade management, everybody is different, but this is an entry setup and we are talking about entry setup. We'll go to live example. Market is closed today, but we'll go to the chart and explore some more trial and attempts for buyers and sellers. So that is the attempt and failure for buyers and sellers in the market, the first entry setup. The 21 attempts, it's also attempts, however, different condition. This is a sell. This is a sell. As you can see, the smoothing line is above the averages, so this is a trending down day. Market is going down in this example. So the market goes, it touched the moving average, but there is no try. The first try was this one. But look at this one. It touched all the moving average and closed below the lowest moving average. And these are 3 moving average: the close, the high, the low. So if it is touched, if it touched all the moving average, and in one candle or 2, maximum 3, I like it the one candle. I accepted 2 candles. I can go within the 3rd candle. But if it is more than 3 candles, no, I ignore it. It has to be strong from the high of the moving average and closes below the moving average, the lower one. Entry in this one, you don't need to wait for a trigger. The entry is at the close. At the close. So the condition for this one, the price has to touch all moving averages, all of them. Not the previous one, only it is enough to touch the middle one. But in this one, it has to touch all of them and close within 3 candle maximum at the low, lower than the low of the moving average, and it has to be strong. For example, if this one has a strong wick down, no, I'm not taking this, even if it is closed outside. So it has to be also strong enough for me to be convinced that, oh, this is a pullback and continuation for the sellers going down. And the same thing, entry at the close, stop at the high. You have to make sure the stop is acceptable for you. The target is 1 to 125 at least. So you take more than 1 to 1 in the trade. Okay, let's go. And this is similar, but this is much more stronger. And someone is, okay, why you're taking this? This one, you don't need to have it the first try or second try or 10 try. Any try happens. This one, you just take it. You don't count. The previous one, it has to be, second try in order to take it. Okay. Now, sometimes I take the first try based on how strong is the trend today and what type of day that we are dealing with. Let's go and look at some example, and this is micro. So let me go. I'm not picking a perfect example. I didn't prepare actually, but let's see this one. As you can see, this is a trend going higher. The type of day, market goes A, B, C, D, then it goes down, and it's still. This is a multi-directional day. Multi-directional day. There is direction up, then direction down, then starting the direction up. Let's say until this point, we are seeing the market very bearish, so I'm not looking to buy this market. At this point, you can see here, maybe this is the start of the day. The market started going down, they break the low. Let's say in here they break the low. So now you decided, you know what, this is a reversal down day, and now I will start looking for sell. Okay, how can I sell? The market in here, make the low, They didn't touch the moving average, so nothing for me here. And here they touched the moving average. That is their first try. Okay, market coming down. Actually, this is the second try. That was the first try. After they make this low, that was the first try. Okay, and this is the second try. Why this is the second try? Because that first try didn't achieve the low, as you can see. So that is the second try to achieve that low. All right, so I will take this trade, and then entry will be a trigger, stop will be the high, and target will be 1 to 125. So we'll take this tool, short from the trigger, stop will be higher. You take a little bit higher, more than just the high, and the target 1 to 125. Actually, they didn't reach it until here. Oops. Okay, so you have your entry here. The market didn't go to the target. It starts swinging there. They give another. Actually, they give a try again here. So that is the first try. That one is the second try. That one is the third try. And maybe this is the fourth try. And maybe you can, I call it first try again. This one. And this is a technique for counting. It based on every time you look at the previous try. Where is the low? That was the first. They didn't give the previous try. The second, they didn't get the previous try. The third, they already get into the previous try. So this will reset the count. And then this is not important. It's by visual. This is the second try. They try again. Okay, they try again. X try, whatever. But don't take the first one. I don't take, you can do whatever you want. I don't take the first one most of the time. Unless this trend is very strong, like this one. It has to touch. It touched the moving average. It closed below the moving average. It closed strong. It's a strong one. There is no wick to the downside, small wick. This one is not so strong. You can see the wick down is equal to the wick up. It's equal to the body. I mean, almost there's no body in here. So that one is okay. Also, it closed below, closed strong, touch the moving average. This one is too late. Why? Because that was the signal candle, not this one. This is the continuation. That one, the one that put the high. I mean, this high. Don't look at this. Oh, this strong green candle will go with it. No, too late. This is the second one, not the first one. You enter after the signal. You will enter during this candle. You don't know this candle will close this way. You don't know. For example, this one, the entry, you entered here and the candle closed against you actually. You are already in a trade. Okay, so you enter after the signal candle. And the market moves, or whatever. Now they come back again. You can see how beautiful is that. So that is your entry. Another one, trigger below this candle. This requires higher stop loss. 1 to 125 is there. Market. If I would like to find a good example, maybe it will take longer time. This just come like this. Okay, so the market continue. So now I'm waiting for the market to, and again, you have to make sure what you are looking for. You make sure to look left where you are. Oh, it's obvious the market is looking to this low now. If the market is giving me a signal that they are going there, so I will keep taking these tries until you know I find a strong support and the market stop giving me signals. So this one also works beautifully. And this one, I will not take this one. And you can tell why. Market comes to the moving average, you can see, no. This long wick, I'm not taking this. And obviously I will not go inside the trade here. Although this trade works, I don't care. It is not giving me my rules. You have to stick to your rules. Even if it means the market will go and leave you. Okay, you wait. Let's see now. This one, yeah, but there's no trigger. The market didn't go below that candle to continue a sell. So it touched the moving average, closed below moving average, but is it strong? I cannot say this candle is a strong red candle. You can see this wick, compare it to the body, it's almost the same, so I will skip this one. And not only that, even the market didn't trigger in this candle going lower. Even it didn't do it. The market goes higher. And then, how about this one? Do we enter short in this one? I'll give you 5 seconds. Yes or no? Think, market touch, close strong. What is the third condition? Close below the moving. No, it didn't close below the moving average. It didn't. Actually, this one is 2021 1, 2, 3. It takes some time until it goes. So if the market didn't give me a signal at the first one, okay, and then the second one, I don't like to go too late to the party, I will wait for the third one. Oh, it closed below the moving averages, so I will enter here at the close. Although this one is so scary, but sometimes you have to take it. 125, almost there. Okay, and then the market gave me a nice one here. Market goes higher, touch the moving average, a try, normal try. Okay, so trigger here, stop there. So what about the previous one? No, just stick to the previous one. Stick to the previous one. This is what I do. I stick to the first signal. And this one is just a confirmation for it. And now a question. What if this is a try and the same time it is a 2021 entry try? No. If there is a correct entry setup, you don't wait for the 2021 entry setup. I mean, for this one, why we use the 2021? Because I didn't get the regular try. I didn't get it. The market didn't close below. So I will have to wait for the 2021. This one, the market gave you the signal at the correct place. So you don't say, oh, there's an entry here and an entry here. No, there is no entry here for this setup. So on this, the market just go and went to the target beautifully. And then the market goes back. It touched the moving average here. Let's see what happened. The market here, they come, the first try, one, sellers. That one, the second try, it is a nice entry setup. But this one, it didn't move, it didn't go. This is a loss. Once you see this, that means the market is just reversing there. Don't be stubborn and say, no, the market has to work. No, the market doesn't have to listen to you. The market doesn't have to do whatever you want it to do. The market will do whatever it wants. And you have to obey and say, okay, that's my stop. You deserve it, market. Well done, market. Take it. I win 1, 2, 3, 4, 5 trades over there. I lose one, fine. And maybe with better trade analysis, maybe you will see here, there was an intersection entry, which we'll talk about later, the counter trend move at this area. So maybe that one will let you what? Avoid taking. And if you take this one and lose, that's fine. Again, the market give you a signal here. They take the stop, and guess what? They give another signal one more time. I think I did take this trade and I lose. It happens. It happens. I took this one and I lost. I tried again and I lost. Maybe. What time is that? No. I wasn't trading the market at that time. Market was closed. But maybe if I see that live, maybe I will take at least one of them. But the point, I will exit at my stop. And now start looking for a buy entry. Market goes higher. It touched the moving average. Look at this one. We don't have a trigger, correct? Yeah. You can see this one. The market comes to moving up. That was the first try, by the way. I'm not taking the first try, even though there is no trigger. The trigger came later here. So it's late trigger. I will wait. I will take the second try. You can see the second, beautiful second try in here. Go, and your entry will be after this with one tick. Also, this one was late. Trigger actually. Touch the moving average, close above, close strong. Entry has to be higher than the high of the candle. 1 to 125. I don't know if this hits the target. Let's see here what happened. Yeah, they tag the low. This is why I say usually you take at least 2 points more for this one. But even if you exit in this one, let's say that you exit in this one with a loss, now you have to take the next one, which is this one. The market come, tag you, and come back, and then the buyers still have control. The smoothing line is still outside, so nothing changed. It's a trap setup. So the entry should be in there with the stop here. You keep trying, and 125 is there, and it's almost they tag the target, as you can see here, and come back. Okay, so also that one, but yeah, another question. If the market gave me more than one entry, so this one was one, and this one is another one, you follow the first strong one. And by the way, yeah, this one could be also a 2021. I call it 2021 because it touched all 21 AMAs. 2021 AMA, so it touched this and this and this. Doesn't need to touch the last one. You can see they did it here. 1 second. Yeah, they did it here. It's 20. This one is a try, and this one is a Bollinger or 2021. You don't need to enter at the trigger. You enter at the close. So the difference between the 2021 entry and the regular entry, the 2021, if it touch all of them, you enter at the close. You don't need for a trigger. And it is 1 to 125. Yeah, the market went to 1 to 1. Sometimes it goes to 1 to 1, 1 to 1 only. If we take 1 to 1, you get the target, but usually I take 1 to 1 to 125. If the market touch the stop, as you can see here, they touch it by a tick or something, as you can see. Let me see. Yeah, they touch it by a tick or something. All right. Even if the market do that, you come back again, you target the same area, or you wait for another entry. Look at this one. The market come back, they touch all moving average, 1, 2. Within 2 candles, they close above than the moving average with a nice candle, and that will make it 1 to 1 somewhere there. Okay, let's see what happened now. The market come back to the moving. Look at this market here didn't give you any signal. It just go down. And then, is this a sell signal? No, because the buyers still have control. Is it a buy signal? No, here the buyer has lost the control. So in this one, you don't have any signal, any try signal. There is maybe another entry signals. We'll talk about them later, but entry setup for trials or attempts, 2021 attempts, nothing in this one. The market goes up and down without you, and that's totally fine. Let's see here. The market come back to the moving average. Okay, where's the first try? That is the first try. But this first try, first of all, it is a first try. I'm not taking the first try. And also it closed below the moving average. So conditions are not met. Now, where is the second try? Oh, the second try is here. Yeah, strong green candle. Strong green candle, but the close is below the moving average. So nothing for me also in there. Is it a sell? Is it a buy? No. Now you can see the smoothing line is inside. So that means no entry. We are in a range now. So you don't follow that one until you wait for this smoothing line to go outside, and then we wait. For example, this one. This is a nice, beautiful example. The market trending now. How I know it's trending? If you see the moving averages outside the moving averages. So it's trending. I wait for the market. This is the first try for the buyers. They come back. This is the second try. Wow. At a nice place. Nice signal candle. I will go. Is it Bollinger? No, it is not a 2021. I call it Bollinger setup. It's not a Bollinger setup. It touched all the moving averages, but it didn't close outside. It has to close outside, so it didn't. So I will treat this as a normal try. So I will wait for the trigger. If a trigger happen, I am in this trade, and my stop will be just below the low. My target will be 1 to 125, and this is the trade is going to your way. Okay, so that was the trade in here. Yeah, they try give, don't like this candle. They give another one. I don't care about these. This is our continuation to reach my target. I don't, for example, when I see this, I say, oh, okay, so the entry is there, my stop is here, my 1 to 125 is there. No, the original target is this one. If the market continues there, fine. So I look at where is the first correct signal that the market gave the buyers to go. I hope this clears. Let me find one more example. So the market now is trending up, and again, you need to follow this with what? With the price action cycle. For example, now this one market is moving higher, it's trending. The smoothing line is outside the moving averages. What's wrong with the buy in here? It's not correct, but why? As you can see, the market didn't touch the moving average. Yeah, it happens. It happens, guys. I don't control the market. I cannot force the market to touch the moving average. And I cannot say, okay, if it's barely touch, go. You have to have a system. For me, I have to follow. If it didn't touch, there is one important condition and rule didn't happen. So I'm sorry, market, I'm not taking this. There is another setup will come soon. For example, this one. The market making this high. That was the first try. And this is the second try. Let's see this. I like to show a losing example as well. Market is trending. And there is another reason why the trade is not working. Because maybe we already achieved A, B, C, D. We already achieved the price action cycle target. Maybe the market just decided to reverse on you. Okay, so that was a try. It's up this. It take out the stop. Not only that, they give another try after they trap the low. They give another try, and the market's still trending. And again, they stop the low. Don't force it. If you do it twice, stop it. Maybe actually you start consider reversing this market. And that's what happened. The market, it's exactly as you can see here. Whenever we get a nice try and another one, the market reverse. Here, a nice try, another one, the market reverse. So just don't assume it has to work. Maybe if it doesn't work, it's helping you. It's giving you a signal that the market is reversing. The market is be ready. I'm not saying just go short whenever you get stopped out. Just be ready. You go short there. The market is coming back to the moving average. You sell this market. You sell it here maybe. You sell it here maybe. Here there's no clear signal. Here there's a sell. Actually, no. You can see here, for example, why this one is not a nice signal candle. The market goes higher. That was a first try. This is number one. Second, you can see the smoothing line is starting to go inside the moving averages which started to be flat. So we don't, it's only trend with the trend setup. So now we don't have trend. Now we have a move, we have a range here. It's not similar to this one. We have a range here, so we don't take tries if the smoothing line is inside the moving average. So all this time you don't take trade. The minute that the smoothing line go inside, you don't take a trade until it goes either this side or the downside. So now it clears is going down. So now you wait for the market to go to the moving average, give you a signal. No signal, no signal. Ignore it. The smoothing line come back inside again. No signal for you. You have nothing to do with this. The setup is not here. You don't have a setup here. I'm not saying there is no way to go short. I'm saying the setup that I explained didn't appear here. This is why we have 8 setups. So the entry setup doesn't mean that the market will not go up or down until it happens. No, sometimes market goes up and down without the setup that you are looking for. For example, the 3-bar reversal setup. Does that mean the market will never go up or down? Either it has to happen? No. The market, it could reverse 100% and quickly, strongly, with grinding, grinding candles without the strong 3-bar reversal. You get my point. So that will take it. I hope that I'm not taking. Oh, it took already 1 hour of explaining this entry setup. It requires practice. You need to practice it much more as you want. Don't just apply it everywhere you see it. You have to be very selective to make sure is this the one you want. So if there's too many tries, for example, let's see here, market is trending up, and the market, once the smoothing is going out, the market never touched the moving average, never. The first touch was here. So you can see now the first try, that the second try, okay, you take the second try. Okay, this is not the second try, by the way. Why? It is the second try, first try, second try, but it is not favorable entry setup because the signal is this one, and you can see this is a doji. I don't enter after a doji, so this one is not a good entry. They touch the moving average, they close above, but the candle is not so strong. In this case, you wait for the 2021 setup. The next candle closed above the Bollinger, so that will make it a trade from the close, stop to the low, and you look for 1 to 125. Unfortunately, they stop you here in this one, and this close doesn't make it a trap because the close still inside, closing below, closing below, closing below, closing at it. The market just goes higher without you, and that is the target. So it happens. So I like to show everything. I like to show everything so you know what you are dealing with. Thank you very much for listening. Next video, I hope that we can explain the strength setup. It's easy, strength setup, and then we'll talk about the breakout in the next video. Hopefully by next week. I take some time in order to prepare this, so apologize. Practice the first one, attempt and failure. Practice the 2021 attempts or Bollinger attempts. Take care. See you at Top Step TV.
He's such a cool dude, handsome, charming, and never too rude. Loved by many, but keep it cool. Don't come crying and be a fool. With that white headset, not sure where he got it, but if there's a winning trade, we're sure he'll spot it. 15 years in the game, he knows the plan. A funded trader, Muhammad's a man. Muhammad's in control, managing the trade, focusing on price. That's how legends are made. Watching the action with a smile and a glance. When it's time to strike, he won't miss his chance. Oh. Price action's the key, he moves with finesse. 15 years in, he's seen the success. In the market, he's sharp, knows how to adapt. Every trade he makes is like a movie script map. He's not just about the charts, it's a masterful flow. Trade management's his focus, that's how you grow. When the pressure's on, he stays steady and true. No crying, no worries, no soup for you. If you say so. If you may know. In control, managing the trade, focusing on price, that's how legends are made. Watching the action with a smile and a glance, when it's time to strike, he won't miss his chance. Muhammad's in control, managing the trade, focusing on price, that's how legends are made. Watching the action with a smile and a glance, when it's time to strike, he won't miss his chance. Muhammad's in control, managing the trade, focusing on price, that's how legends are made. Watching the action with a smile and a glance, when it's time to strike, he won't miss his chance.